There's clear guidance from economic theory that for a stock pollutant like greenhouse gas emissions, a price instrument is superior to a quantity instrument. Taxation is better than tradable permits. However, politically, cap and trade has been the instrument of choice, and a number of subsystems have been created over the years. The Kyoto Protocol and the Marrakesh Accords established free markets. There's trade in emission permits between the rich countries of the OECD. There is trade in emission credits, or project-based emission reduction, between countries of the OECD and countries in transition. That's the former Eastern Bloc, and this system is known as joint implementation. And then there's trade, again, project-based or emission credits between the OECD and poor countries, known as the Clean Development Mechanism. The EU established its emission trading system that used to be called the Emission Trading Scheme a while ago, and then later on created a new one, an additional one for aviation. There is a cap and trade system in the northeast of the USA. There's one in California that is coupled to one in Quebec. There's a separate one in Ontario, and there's 9 regional markets in China. And then there's national markets in New Zealand, South Korea, Switzerland and Kazakhstan, and since the 1st of January 2021, also one in the UK, although at the time that this was recorded, the 19th of January, there was actually no sign of the UK system operating, but it does exist on paper. And you listen to this, there's in total 18 markets at the moment. You sort of get the impression that politicians sort of half listened to the advice of economists. Not only did they go for tradable permits rather than for taxation, but also politicians seem to have heard economists say that markets are good, and economists also tend to say that more is better, and the conclusion seems to have been that more markets is better. That's actually not the case at all, because if you have 18 markets, you will have 18 prices. But CO2 is an homogeneous good. There is no difference between a ton of CO2 emitted in China and a ton of CO2 emitted in the UK, and therefore they should be treated the same, and the price should be the same. That is the efficient solution, or the cost-effective solution. And prices have not been the same at all. Here you're looking at an overview of the price evolution. You see the EU ETS, and then REGI came in later. New Zealand was the third to start pricing its carbon. And you see that there's quite a bit of the difference between the prices. And then as new markets were introduced later on, you see that yes, there isn't quite a range of emission prices or permit prices. And this is just not how it should be. CO2 is an homogeneous good, and the price should be the same, but it clearly isn't. This is not a cost-effective solution to emission reduction. You may wonder if there are 18 different markets for CO2 permits, and CO2 is all the same, then why would these markets not just be coupled to one another? That is a good question. The question is, can permit markets be coupled? And the answer is yes, in principle. Long distance trade precedes the formation of nation states. And this is a natural tendency of humans to trade with one another. You should be aware, however, that permits are not goods. Permits are government licenses. So it is a little bit different. You cannot just trade licenses as you can trade a loaf of bread or a barrel of oil, but you're trading in emission permits. And that means that in order for permit trade to occur, what you need is the government, the regulator, saying that they accept imported permits. Governments do not object to you exporting permits. It just means lowering of the cap implicitly. But imported permits need recognition. So you need a government act to allow for international trade in emission permits. You may argue, well, CO2 is a homogeneous product, but permits are not. And there's differences in the way greenhouse gases are treated in different countries. And that can be because enforcement rules are different. It can be because monitoring requirements for emissions are different. And it can also be that emissions themselves are defined differently. That, for instance, in one country, when you're planting trees, in order to suck CO2 out of the atmosphere, you only account for the CO2 that is stored in the above ground biomass, the tree itself, whereas in other countries you may say, well, we're also going to count the CO2 that is stored underground in the roots of the tree, which is much harder to measure. And that sort of differences make that, even though CO2 is CO2, a CO2 permit is not necessarily equal to a CO2 permit if they come from two different countries. But those differences are things that financial markets are perfectly capable of dealing with, because a bond issued by one government is not the same as a bond issued by another government. We have a whole system of rating and comparisons that sort of allow you to say, well, the promise of a country like Saudi Arabia to pay its money back is perhaps not the same as the promise of a country like Nigeria to pay its money back. And financial markets can easily deal with this, and there's no reason why a financial market could also not deal with differences in CO2 permits. Actually, there is a lot of leeway here. Because permits, as I said, are not goods, they're not services, they're government licenses, and as a result, emission permits do not fall under the rules of the World Trade Organization. So we actually, as a country, have quite a lot of leeway in how you'd want to regulate this. So in principle, all these problems can be solved. The fact that these issues can be solved does not mean that they have been solved. And countries have been very reluctant to recognize other countries' permits. And essentially, there is no trade between those 18 systems that I just listed and that I showed you the prices of. There's one exception to this. Before there was the EU ETS, there was tradable permits in Denmark and tradable permits in the UK for a brief period, and they were actually mutually fungible. But then the EU ETS came and overtook it all, and that was the end of that particular international market in emission permits.